Welcome back. You're watching Political Exchange. I'm Karima Brown. My guest today is Stephan Morais. He's the Deputy CEO of the National Investment Bank of Mozambique. Stephan, before the break, we were just getting into the discussion around corruption in Mozambique. And of course, we know that perception is everything. There has been concerns raised certainly by international agencies about the extent of corruption, particularly at a very high level in the Mozambican state. Are you not perhaps worried that this perception, and in instances where it's been proven, damages the outlook for investors of Mozambique as a place to do business with?
Well, perceptions of corruption are frequent and sometimes justified all over the continent. These countries which are still in the development stage are, face these issues quite frequently. On the other hand, Mozambique, like I said before, has been followed by international institutions very closely and is on the process of joining the International Initiative on Transparency on the mining and extractive industries, which is, again, a good sign, and legislation is being passed regarding those issues. We see a deep commitment from the government to eradicate corruption, to minimize its effects. And I think it's also important for international investors to understand that it's also their responsibility to not engage in practices which are not transparent. You cannot have only one side of corruption.
It's interesting that you mention that, because the blame often goes to public representatives, but it's often been said that for every corrupt politician, there's a corrupt business person offering that bribe. Do you think that there's enough sanction against businesses who in fact come into countries, particularly countries with fragile infrastructures, countries that emerges from conflict, and in fact abuse those kind of fragile conditions to fast track and bypass regulation in some instances to get their businesses off the ground?
Right. We think that we see good progress in terms of some of the frameworks that have been set up in Europe and the US regarding transparency and no tolerance regarding corruption from companies originating from those continents. But obviously it's something that sometimes firms tend to think it's a fast track, like you say, and they think that they can cut corners and get faster. We believe that sometimes it backfires. Not only the reason that you might be caught, which is already a problem in itself, but the fact that if you engage in those activities, it's probably very hard to stop, because you become a hostage of that situation forever. So we obviously do not advise in any way that clients engage in those sort of practices. And obviously, if we would be aware of that, we would not be able to tolerate or work with such firms. But it is very important that both small companies and big companies are aware that this is not a way to do business in these kind of countries, because it will only perpetuate not only the poverty, but it will probably delay their own investment plans and does not benefit anyone in the end.
Stephan, take us through some of the major projects that your investment bank is currently undertaking, and who are your partners?
Right. We essentially work on advisory and financing mandates. So essentially project finance, corporate finance, origination of capital markets, which is an area which we believe has future and is important for the development of the country, and it's still in its infancy. And then we also do some financing ourselves, so either through our balance sheet or raising capital and debt. And the projects that we've been engaged in that are ongoing, and therefore I cannot disclose details, but they are related to essentially infrastructure, mining, agriculture, industry and gas. So these are the areas that are actually driving the economy. And while we don't have dozens of projects, the parent bank, Caixa, has a big track record in Africa, but BNI in itself is a new bank, but is involved in all these areas because these are the areas that are driving the economy.
Take us through the kind of economic outlook, particularly around gas. We've just seen the discovery of gas found in areas in Mozambique. What are the prospects, and which countries and corporations are you likely to attract, given the scale of the find in Mozambique?
Right. We've seen recently a good example of how this is attracting attention with the battle for cove energy in London. And essentially today there are two blocks, from one led by Anadarko and the other one led by ENI, with a total estimate reserves of close to 100 trillion cubic feet of gas. That's a lot of gas. These are some of the biggest reserves in the world. With that, it is expected that you'll have above $60 billion of investment in LNG trains and related infrastructure. And that doesn't take into account all the subsidiary industries that can come up with the gas extraction, which the government intends to promote exactly to add value to the gas sector. So what you're talking about is potentially customers from Asia, Korean, Japanese, etc., which have huge requirements of gas, engaging in take-or-pay or other types of contracts with these sort of corporates, foreign corporates, and that own the blocks. That enabling the creation of the infrastructure that then will enable on a second stage the creation of industry around the gas part of the economy. This is what has been done in Trinidad and many other countries that have that had major finds in gas, and this is what can transform the Mozambican economy on the long term.
Mm-hmm.
And it is important to know that this is on the long term, because these are difficult times for the world. These are significant quantities of gas, but that require a lot of capital. You don't have $60 billion flying around so easily being deployed into sub-Saharan Africa. But the economics, if the economics are there, these projects will happen, and we believe they will happen.
And of course you need investors who take a long view on these matters.
Absolutely. In fact, I think that not only for gas, but for all the investments in sub-Saharan Africa, typically you need investors that are committed for the long term, because results take a long time. Quite often, compared to other countries, decisions take a long time. Everything has to go through a process which is fairly more complicated, and therefore you can't really think that you're on Wall Street
Mm-hmm.
or expect term sheets in a couple of days, because these are processes. But if you see it from the bright side, those that invest for the long term will reap the benefits, because there's less competition, because not all kinds of investors are willing to go through the motions,
Mm-hmm.
go through the process,
Mm-hmm.
and wait
be in it for the long haul.
Being it for the long haul.
Mm-hmm. Now, of course, we know that South Africa has become part of the BRICS group of countries. Brazil is part of that. You have particular sets of relationships with Brazil, given that you share a language. Take us through Mozambique's economic relationship with Brazil, and how does that position Mozambique, even though it's not a member of the BRICS countries, but how does it access, important blocks like that?
Well, the cornerstone of the relationship nowadays is the investment from Vale in the coking coal mines in Tet, where you're talking about significant reserves. That's a long-term project that derives into infrastructure creation, namely railroad construction, ports upgrade, airports upgrade, etc., to enable the coal to be exported in vast quantities to Asian markets and others. Coal is already being exported, but it will be much more significant in a few years. Typically, a company such as Vale brings along with it Brazilian contractors, such as Odebrecht and OAS and Galvão and many others, Andrade Gutierrez and so on. So you have these companies that come together with Vale, and they start building infrastructure, and then they start providing other services as well. So that, together with the financing from BNDES, the development bank from Brazil,
Yeah.
is a very effective way of Brazilian companies and corporates taking an interesting stake in the economy, and that is really a cornerstone investment for the country.
Now, of course, Brazil is being held up as a kind of poster child, if you like, for the way in which state-owned enterprises can be used effectively with public-private partnerships. We often look to Brazil to serve as an example, but to what extent is the Brazilian model applicable to African conditions, and in your case, particular to Mozambican conditions?
All models are different. Certainly Africa is a very different place from Brazil. You find many similarities between many South-South trade countries, and most likely there will be more similarities between Mozambique and Brazil than Mozambique and China, for example, or even India. But that doesn't mean that it's not a different market. There is a period of adaptation also from the Brazilian corporates into the African market, particularly also because many of the Southern Hemisphere companies, typically they have been confined to their own market. So they're not typically your Western multinational that have been around the world for a long time. So there is a learning curve also for the Brazilian corporates. But they do have the manpower, they do have the expertise, they have the capital, and they have, the expertise that Africa needs, and particularly Mozambique and Angola.
Let's talk closer to home, Mozambique-South Africa relations. Of course, we know that the countries share warm fraternal relations. There's very strong links. South Africa itself is rolling out an ambitious infrastructure rollout of over R1 trillion over a period of about 8 years. Take us through some of the economic partnerships between South Africa and Mozambique, and how your bank is integral to that, and what are the lessons that countries can learn from each other?
Right. Well, we typically have already several corporates in Mozambique, particularly Sasol, but also others, which have important projects in Mozambique. But we believe the relationship could be much deeper. And it is also up to the South African corporates and also the smaller companies to come into the country and compete with their new competitors. So not only with the Portuguese firms and with the Mozambican companies, but also with the new Brazilian, Chinese, Indian, and many other investors that are arriving in big numbers. And how can they do that? The idea would be that they would become more Mozambican, more Portuguese speaking, not flying in and out, actually landing, staying, investing again for the long term. I think that's what's going to separate the successful investors from the not so successful. If you want to be in this kind of country, be it Mozambique or other sub-Saharan countries, you have to establish a base. You have to integrate locally. You have to absorb the culture. Take your time. Do not rush into decisions. Don't cut corners. Learn the language and hire Portuguese-speaking professionals, because that makes a big difference.
Okay, certainly lots to talk about, excellent prospects, but companies that are needed are ones with vision and people who are going to be in it for the long haul. Stephan, thank you so much for your time.
Pleasure.
That's it for tonight. I'm Karima Brown. Goodbye.